On today's episode, we are going to talk about Google. They just reported earnings and they're up over 7% after hours. This is one of my tier one stocks right now. And on today's episode, we're going to do our earnings recap. We're going to take a look at some other financial numbers, and we're also going to look at my thoughts. Like always, if you're new to the channel, make sure to subscribe and don't forget to hit the like button. It helps the channel out so much. Remember, none of this should be taken as advice, as I am not a professional. And let me know in the comments below, what are you doing with Google right now? Are you buying? Are you selling? Are you waiting? And while you are down there, don't forget to join the Discord channel. It's free to anybody that wants to join, and I actually share all my positions there. I share when I buy, so feel free to join. Finally, make sure to click that Webull link. We both could get a free stock if you do, and what's better than a free stock? So like I mentioned, today we are taking a look at Google. Right now is sitting at about $1,673 after hours. This is up about 7.5%. Market cap right now with the new increase is closer to $1.61 billion. Year to date, it has returned about 23% to investors. And right now, even with this big boost, it's still down about 2% from its all-time highs of the year, which I believe was in September when we saw that pullback after those huge extensions. So let's take a quick look at their earnings. So quarter three GAAP earnings per share were $16.40, which ended up beating expectations by $5.19. Revenue for the quarter was $46.17 billion. Let me say that again, $46.17 billion. This is up 14% compared to the same time last year, and it also beat expectation by $3.3 billion. Operating margins right now are about 24%. This is better than the overall consensus, which was 19.8%. Let's take a quick look at revenue by segment. Most revenue for Google comes from ads. Out of that $46 billion that we talked about, $37 billion comes from Google advertisement. And this is broken down into the following. About $26 billion comes from Google and search, and that's up 6.5% compared to the same time last year. YouTube ads is $5 billion, and that's up 32.4% compared to the same time last year. It'll be so funny if a YouTube ad appears right now while you guys are watching this. Google Network members properties is $5.72 billion, and that's up 8.9%. We have Google Cloud, one of my favorite segments right now. This is $3.4 billion. It's still a very small portion of Google's revenue, but it is up 44.5% compared to the same time last year. Then we have Google Others. And Google Others, this is where you have your hardware, your Google Nest, and all the other hardware, your phones. This is $5.48 billion. That's up 35% compared to the same time last year. And then we have other bets. Other bets are small companies that Google owns, and we're going to take a look at one of them. But Google owns very small companies, and they call it other bets because they're companies, small companies that we can see barely produce any revenue. But the main purpose of these are very disruptive companies that if they do take off, they can be a massive win for Google. One thing I do want to show you guys is Google operating income is $12.6 billion for this quarter. And even though other bets makes up only $178 million, and let me say that was up 14.8%, it actually loses about $1.1 billion. But that's because Google is very, very focused on really increasing their strength in these platforms, in these small companies, and just continue to innovate into some disruptive technology. All right, now let me talk about some things I'm super excited about Google. First, we have that Google Cloud. Google Cloud is growing like crazy. The second thing I'm very excited about is the way Google is using to keep eyes on their platform. So we saw Google's main revenue comes from advertisement. So what do they need to do to sell more advertisement? More eyes need to come to their platforms, and they're doing a lot of things. And unfortunately, Google is already pretty big that some of these changes aren't ones that we can really tell up front, but they're doing a lot of methods to overall improve, like the e-commerce advertisement when you go to Google platforms. They're trying to show you different prices and different methods. So they are behind the scenes always trying to improve that. The other thing I'm super excited about is their YouTube gaming. Streaming and esports is probably one of my most bullish segment ever. And with YouTube gaming, it is a platform that is going to be driving more players in here. And we can see here and on my left, I have YouTube gaming and Facebook gaming, and we can see over the past year, both demands have actually increased in the search engine. So we can see a nice jump of YouTube gaming. We're also seeing a nice jump on Facebook gaming. And if you guys are new to the channel, later today, not tomorrow, probably in the next hour or two, my Facebook video will be out. So make sure to subscribe to get that information. But we can see YouTube gaming is increasing. Then we're talking about Google Stadia. Google Stadia is Google's cloud gaming platform. We see now Amazon entering, we have Microsoft in it, we have EA Games, we have so many platforms entering entering cloud and gaming. So it seems like all these companies believe this is going to be the future of gaming. So I'm very happy Google Stadia is also in there. One other thing, I just wanted to show you guys some of Google's other bets. Here we have Waymo. Waymo on October 8th of 2020 is opening its full driverless service to the general public in Phoenix. This is a self-driving Uber, for example. So Waymo, they're only open right now to the public in Phoenix, but that is pretty impressive that is actually happening here in the United States. And before we continue, guys, you should also see a link down there, down below for 7 Investing. And 7 Investing, every month they recommend 7 stocks for $17 a month. So you can go to 7investing.com and use promo code Jose, or you can just click on my link down there and it would automatically give you that $10 off for the first payment. May I say this though, yes, this is an affiliate program, but I do use their service and would recommend it easily to anyone. All right, so now let's take a look at some financial numbers. First, let's start off with this balance sheet. Google, Facebook, Microsoft, and the big guys probably have one of my favorite balance sheets of all. First, let's take a look at total cash equivalents. Right now, Google has about $133 billion of quick cash available to it, and that's up about 13 billion from the beginning of this year. Total assets have increased by about $24 billion. We did see that huge boost in cash and cash equivalents, but we're also seeing a nice boost in property and equipment. In my guess, they're building new facilities with new servers, so that is that overall increase of property and equipment. And what I like about that is total assets grew by about $24 billion. But total liabilities only grew by about $12 billion compared to a beginning of the year. So they're growing their assets a lot faster than their total liabilities. The other thing is Google right now almost has 2 times more cash than total liabilities. And what's more amazing than that? This is a perfect balance sheet. In my opinion, they are already profitable and they have a very strong balance sheet as well. Just to talk a quick look at their cash flow from operation is about $15.5 billion for this quarter. They do repurchase of capital stock. They bought about $5.7 billion of shares this quarter, so they are returning to shareholders as well. There is a net decrease in cash and cash equivalents compared to last quarter, but the only reason is they bought a little bit more marketable securities, which are just like some short-term investments. All right, next, let's take a look at the growth Google is expected to see. They are seeing 14.6% average annual growth for the next 3 to 5 years. This to me is a very strong growth for a company this size. Now let's take a quick look at some historical numbers. First, let's take a look at this revenue growth. For the past 4 years, Google has grown its revenue by either the high teens or the low 20s. The last year was 18.3, and the few years before that were closer to 20. Another thing we're seeing is profit margins right here. They're very constant. Right now, profit margins are in the low 20%, and that seems to be the case. There is this little drop here, but hey, things happen, business happens, but on average, it is around that low 20%. One thing we are seeing is gross margins are decreasing, but they're still as high as 55, in the mid 50%. One thing I do want to say is most likely that gross margin is decreasing as Google has begun to enter the hardware platform, right? With their phones, with their smart homes, and with all the other platforms that they have in the hardware side, their Google Chromecast and stuff like that. Hardware starts to decrease gross margins, and I do believe that's the major reason we're seeing this downtrend of gross margin for Google. Next, let's take a look at cash flow from operate. Next, let's take a quick look at some of their margins. Operating cash flow for Google is in the mid 30s, and it's pretty flat for like the past 10 years. This is very impressive. Another thing we're seeing as revenue goes up, we're also seeing that increase of net cash flow from operations. Free cash flow margins is all over the place, and this actually makes sense. Free cash flow margins, for those that don't know, is operating cash flow margins minus what they spend on capex, and capex is usually equipment that are used to develop the company. So this capex can be like new servers, new equipment to build that Google Cloud platforms and stuff like that. So that's why it's all over the place. As long as it's positive, that's great to me. This tells me that this company is still focused on growing, and they're still focused on making sure they have the greatest equipment at the moment. Now let's take a look at my thoughts. And before we go any further, guys, there is some new merch in the channel now, Self-Taught Investor, because that's exactly who I am. I'm pretty sure most of you guys are out here. You guys are all self-taught investors that are trying to learn the game from the school of hard knocks. And that's the school I went to for this stock investing game. So I hope you guys enjoyed it. As simple as I can make it, and I'm actually enjoying it a lot. So let's take a look at my thoughts. So first, I want to take a look at valuation for Google. So Google right now has a forward PE ratio of 27.45 before this 7% gain. Now with this new 7% gain, this forward price to sales ratio, forward PE ratio, and I do believe Google is in a place where price to sales ratio doesn't make sense. This is a company that we're looking at forward PE ratio. With this 7% gain, that forward PE ratio is closer to 29. I don't know if you guys have been following my videos, but you know who else is closer to 29 now? Microsoft after that drop. You know who's also closer to 29 too? Apple. So we're seeing that the tech giants are kind of valued very similar. I think actually Apple might be a little bit lower. It might have dropped a bit on today's earnings. I have to do a video on that. But before the earnings, they were closer to 29. So this tells me that they are very similarly valued. Now, to my bottom, I have Facebook. And you might be like, Jose, why are you measuring it with Facebook? Facebook, I think, is the perfect contender because just like Google, Facebook's main way of making money is through advertisement. So Facebook right now, not with, I don't know if it dropped after earnings. I am doing a video in a bit, so make sure to check that out. But Facebook's forward PE ratio was about 27.59. So very similar to Google, in my opinion. So I'm very happy to hear that. To me, Google right now, after this huge drop, this huge increase, I'm not intending to buy anymore. I'm not intending to buy any Google right now. But it actually kind of gives me more insight on how I should be valuing Facebook. Facebook and Google were kind of valued similarly. But down here, I have gross margins, profit margins for both Google and Facebook. And Facebook is the one to my right. And Facebook tends to have higher profit margins than Google. So to me, I would have expected Facebook to actually be more expensive than Google, but it's not. And this is actually pretty shocking. I'm going to talk about it in my Facebook episode, but I do believe Facebook right now might be at a very great price compared to all the other tech giants right now. But Google right now, this is a tier 1 stock for me. Google is a tier 1 stock for me. I'm not going to sell any right now, even with this big drop. I'm still holding for the next X amount of years. I'm not expecting to buy right now. I am happy with my current position size, and with this nice increase right now, I believe it's at a decently valued. So for me, with my position size already, I wouldn't buy. If I didn't have a position, I might, anytime I don't have a position in anything and I want to enter, I would enter with the smaller position size, especially after big jumps like this. But like I mentioned, right now, since I am happy with my position, I'm not intended to buy. But let's take a quick look at Google. What do we like? I liked a lot their revenue growth. I'm seeing their huge growth in clouding platform, very strong balance sheet. We're seeing huge numbers in advertisement coming back, strong cash flow, and just the overall method that they're pushing forward. I think Google is one of my favorites and will stay as a tier 1 stock. So like always, guys, hope you guys enjoyed today's episode. Make sure to subscribe, make sure to hit the thumbs up, and let me know in the comments what you guys liked about Google.